Hi there, I'm Tyler Ballhorn, and this is the Stockscores Market Minutes for March 11th, 2013. My apologies for the poor audio quality this week. I am out of the country right now using a different computer than normal, and I'm obviously having a little bit of a problem. All right, let's get into this week's video. First, I'd like to tell you about the Stockscores Canadian Active Trader Expo for 2013. I will be doing live presentations across Canada in the month of April and into May. If you would like to attend and learn how to minimize the size of your losses, how to find at least 2 hot stocks each week, how to analyze any stocks in seconds, plus much more, go to stockscores.com/skate and you can learn more about these events and register for them. This week I want to talk about trade catalysts. You know, you can have a great looking chart, but if there isn't a catalyst that will drive the market to speculate, there's a good chance that that great chart won't materialize. Stocks need a catalyst to capture buyer interest. Investors will speculate on a stock ahead of that catalyst and drive price higher. What I like to do is look for technically healthy stocks with the potential for significant fundamental change. By doing a little bit of reading around the internet based on the company symbol or company name, you can often find some information about things that are coming, things that may be driving abnormal trading activity. When I see that combined with an indication that the market is showing an interest in the stock, well, that really is a great trade setup. For example, here is the chart of Blackberry, which is the stock that I picked up on about a week ago when it started to behave abnormally. Well, today the market really took a strong interest in that stock, sending it up more than 10% because the launch of their phones in the United States, and also there are some takeover rumors. Well, all of that happened at the time when the market was breaking off of the upward trend line. I've circled that in green. Do a little research, you see, hey, they're going to be launching their new phone in the United States, obviously the big market for Blackberry, and within about a week that stock starts to move. And so that's the concept behind looking for catalysts. All right, let's look at the overall charts then. Here's a chart of the SPY, and obviously remains in a strong upward trend. No sign of a breakdown. We've had a couple of pullbacks in that trend, one in December and another in February, but the trend continues to be in place, and so we have to call this market bullish. The Toronto Stock Exchange has been in a sideways movement over the last little while. It is starting to tickle through resistance, and so we could see this market start to catch up in the near term. The Treasury bond market continues to drift lower. That is a sign that money is coming out of the safety of Treasuries and looking for a place to land, most likely the stock market. The U.S. dollar continues to be in a strong upward trend over the last 6 weeks. No sign of a trend break there. It is a little overextended to the upside, but this remains a strong currency globally. Gold is in a downward trend and therefore something to avoid. It does have support here, and so it wouldn't surprise me if we see a little bit of a bounce back in the short term, but generally speaking, unless you're a very short-term trader on gold, I do not want to be a buyer right here. Oil is in a long-term pennant pattern. It has bounced off of the upward trend line as I suggested it would last week. Therefore, expect a little bit of upside, but not considerable upside in the short term. My expectation is that over the next 1 or 2 months, we're going to see this kind of grind sideways in this relatively narrow trading range. And finally, fear is back into its downward trend, and therefore fear is not a factor in this market. So my outlook then is bullish on U.S. stocks, bullish on Canadian stocks, but Canadian really lagging the U.S. still, although probably better upside potential once it starts to get some upward momentum. Bearish on gold, but I do think it could bounce or go sideways here for a while. Neutral on oil, although it could rally a little bit in the very short term, not considerable upside. U.S. stocks continue to lead global equity markets, but strength resides mainly in the large caps. That strength may start to broaden, which could help the Canadian market catch up. Oil and gold likely to be sideways in the short term, oil with an upside bias and gold with a negative bias. That has been the Stockscores Market Minutes for March 11th, 2013. Again, my apologies for the audio problem this week. We'll get that fixed when I'm back from vacation next week. Have a great week in the market and trade well.